Hi everyone, my name is Stewart, the CEO of Orefinders, and we're back again with another episode of Drill Bits where we're going to be talking about gold and gold price, and it's a special episode because we have a special guest, Peter Koven from Bay Street Communications. But most people might know Peter from his extensive writing on the mining industry with the Financial Post. So, welcome Peter.
Thanks for having me.
So, I'm very curious to get your opinion on gold price. Everybody seems to have one. Oftentimes people are making predictions. What are your thoughts on people's ability to actually predict the gold price?
I think it's impossible. I mean, we've seen the former chair of the Federal Reserve say it's impossible. There's plenty of people out there who have been, accurate for certain lengths of time, but over the long term, no one's ever been completely accurate. It's inherently impossible. The money flow. It's not a huge industry. The money flows in and out can be vast in very short periods. So to be able to predict the price with any strong degree of accuracy over the long term, there's no evidence that anyone's really ever been able to do it.
No, certainly I'll agree, and I always just revert to some of the titans of the industry, people like Peter Monk, people like Tom Kaplan. These guys know gold better than anybody, and I think they'd be the first to admit that certainly in the short run, all bets are off. Don't believe what anybody's saying. But I think if you're sitting in my shoes, if you're an operator of an exploration or a mining company, you kind of have to have a belief that gold is going to go up in the long term, but you have to be patient.
Yeah. You have to be prepared for anything. If you're going to be in this business, you're obviously going to be optimistic about the gold price, and that's a good thing. But history has shown us you better have a project that's going to be viable at a much lower price than where we are now, or you're not going to survive in this business for a long time.
Agreed.
Simple as that.
Agreed. No. So that leads me to my next part of the gold question: is all-in sustaining gold costs and versus cash costs in the industry's attempts to add transparency. What are your thoughts?
Yeah, I mean, cash costs, after a while, they kind of became a joke. I mean, you had companies saying they were producing gold for $500 an ounce, but if you look at their income statement, they weren't making any money. So the AISC was brought in, well, it's been quite a few years now, as a way to kind of should give a more realistic assessment of what it costs to produce an ounce of gold. And no question, it is much better. But it's not perfect. It doesn't include taxes. There's no interest expense, which is a big deal considering a lot of companies are carrying a lot of debt. And obviously, the timing of sustaining capital, is not consistent quarter after quarter, so that affects things. So, while it's a big improvement, it still doesn't really tell you what it actually costs a company to produce an ounce of gold. You still got to look at the income statement.
Okay. Now, finally, just to close out, I wanted to talk about gold in a Canadian context, and bringing it back to Orefinders. Orefinders is a Canadian developer, and all Canadian companies, whether you're Kirkland Lake or whether whoever Gold Corp operating at Red Lake, we get the benefit of selling our Canadian gold in the U.S. prices, and $1,200 U.S. gold is really $1,700 Canadian. Yeah. How advantageous is that to Canadian miners?
Well, anyone in the industry knows it's really advantageous, but I think maybe the investment community doesn't really appreciate it. I think that people can't help but think of gold in the context of the U.S. dollar price, and think about it, if the U.S. dollar price was $1,700 now, sentiment in the sector would be so much better than it is. But for the Detours and Kirkland Lakes of the world, it really is $1,700. So I'd argue that sentiment for these companies probably should be a lot stronger than it is because they're making serious money at these prices.
I agree. And I mean, if you can't make money at $1,700 in this business, well...
you shouldn't be in it.
Exactly. So I guess, in closing, the message is, buy Canadian gold companies. The margins should be there, and I think they are. So anyways, we'll wrap it up there. Thank you very much to Peter for joining us, and we sure will have you back for another episode soon.
Thanks for having me.
Thank you. And stay tuned for more drill bits.